Hello and a warm welcome to the Open Treasury podcast, your go-to source for the latest news and analysis in corporate cash and treasury management. This show is brought to you by CTMfile.com and the Treasury News Network, where treasury professionals learn and share the information that matters most. I am your host, Pushpendra Mehta, Executive Writer at CTMfile. We are very excited to welcome back Jack Large, Editor of CTMfile, and Craig Jeffery, Managing Partner and Strategic Treasurer, for today's episode. Jack and Craig, it's time to get some deeper insights from you on our themes for today, namely cyberattacks, ISO 20022 migration delays, interest rate hikes, over-the-counter foreign exchange market survey, and finally, decentralized finance, blockchain, and cryptocurrency transactions. Listeners of this podcast can read these articles and also review a variety of treasury content by visiting ctmfile.com or by following the links in our show notes. Let's start our discussion with cybercrime. The first story in this section is about the US Treasury Department successfully thwarting cyber attacks from a pro-Russian hacker group last month, reportedly preventing disruption and validating the effectiveness of the department's aggressive strategy towards its financial system cybersecurity. The second story pertains to cyber attacks in Australia. According to Fitch Ratings, the frequency of recent cyber attacks against Australian organizations is pressuring lawmakers, regulators, and supervisors to create minimum cyber standards that will reportedly aid in long-term cyber risk mitigation. The third story is about US banks and financial institutions processing roughly US $1.2 billion in likely ransomware payments in 2021. A new record and almost triple the amount of the previous year, according to a new report from the Treasury Department's Financial Crimes Enforcement Network. The report says that over half the ransomware attacks are attributed to suspected Russian cyber hackers. Given that cybercrime continues to pose a serious threat to national security as well as financial industry and corporate sector security, governments, bankers, CFOs, and treasurers must be concerned with the significant rise in cyber attacks and ransom payments. Craig, can you recommend any specific or significant security measure that corporate treasurers and finance chiefs should adopt to mitigate cybercrime or ransomware attacks?
Yeah, well, I think broadly there's a big need to understand that Treasury is the superintendent of payments, not just payment security. And being superintendent doesn't mean they do all of those functions. So any organization that's not looking at how they systematically and regularly update their defensive posture, the human element, the digital element, is missing out. So this regular review of what's going on. I think one piece would be start with a full inventory of everything you use for payments, every payment rail, every originating system, and how that moves forward. This is becoming more common, that people are making sure they have a complete inventory, not just focusing on the largest ones that tend to be the most well controlled. That's one. I think two, this idea of strengthening the human element, because much of the compromises that take place involve fooling people at some component. So strengthening the human element, the human firewall, is a secondary piece that takes place. And then the third thing I would say, in terms of the way that you asked that question, would be what are your banks telling you should be doing? They have many services. They have many structures that they recommend that helps provide security, but they also have significant advice in terms of what they see as helping their other customers either detect or prevent and detect different types of cyber attacks. Listen to your bankers. They don't want you to be harmed. They know a lot because they see a lot and they discuss quite a bit with their partners. So listen to them. And then thirdly, I know Strategic Treasury, we have quite a bit of research on this topic as well. And there's free reports that people can download. We can put those in the show notes. Those are some of the things. We have to have a much stronger defense against the types of attacks that exist.
Those are great points. Jack?
The thing that keeps on coming up is making sure that you're checking your employees and the environment in which they work. The Ukraine-Russia war, or Russia's invasion of Ukraine, has brought up several examples in the UK of people with Russian links being pressurized by their counterparties in Russia to encourage fraud and so on. That's the first point. It's a new dimension which needs to be checked. The other thing is that increasingly we are starting to see more and more regulation by banks and their authorities. We've seen new regulations come out of Australia. What's occurring to me is whether there needs to be coordination of these central bank regulations, the country regulations, so that you get the best of the US, the best of what the ECB is doing, and we somehow pull these lessons, because at the moment we're all over the place. At the recent meeting of treasurers, they all expressed concern at the level of fraud and how vulnerable they were.
So what I heard from both of you is that people are concerned, and that's why listen to your banker makes a lot of sense. That's great advice. Our next theme is about Canada delaying ISO 20022 migration. Canada's high-value payment systems move to ISO 20022 will be delayed until March in order to keep in step with the recently postponed migration to the message standard by SWIFT and the Euro system. Jack, the new messaging standard ISO 20022 promises treasurers unprecedented control and visibility. However, would these delays impact corporate treasury in any way?
Well, certainly some of them will, with a sigh of relief, has been postponed. The problem with new standards, particularly when it's global, is that every single part of your network needs to be, the treasurer's network needs to be au fait with the new standards. So no wonder we're seeing local delays from the ECB in Europe to encouragement by other parts of the world to delay things. SWIFT is having problems with it, but I think there's no way they've got to wait until everybody's ready. At the moment, not everybody's ready. I would encourage corporate treasurers to be very careful, because if your payments go up the spout, you then have all wrap-on problems elsewhere.
Is there a blessing in disguise, Craig, because of the delays?
No, to me, it's a situation as we're adding new payment rails, we're adding new format types across the globe, and there's activities that are changing within Canada, of course, and through SWIFT, and these things don't always roll out exactly as planned, but they're much more robust payment messaging and messaging platforms and formats and standards. So there's a lot of good opportunity for it. Missteps create a significant problem. And so, whatever extra time they need tends to make sense, but it's not a particular surprise that there's some delays. We see that regularly. I'm looking forward to the better formats being available and then the adoption taking place. And then most importantly is that I'm looking forward to and hoping that banks can provide even more information inside those formats, so they're a richer format. There's a great promise of it's a better format, but you have to put more information in it too to make it that much more superior. So hopefully banks will be leveraging that. That'll help everything from reconciliation to cash application to forecasting.
Just to follow up on Craig's point there, the problem when you get new format standards is that the banks throughout the world need to develop supporting services to use this information, present it in a way that corporate treasury can use it easily and rapidly. And these things take a lot longer than a lot of people planned.
The next section for today is about Bank of England raising its benchmark rate by 75 basis points, which is its biggest hike in 33 years, to combat inflation, even as the UK central bank warned of a prolonged recession. Amid monetary tightening, UK companies are feeling the pinch of higher borrowing costs, increased insolvencies, and a rethink of mergers and acquisitions, expansion plans, and other big investments. Jack, are rising interest rates likely to intensify credit risk concerns for UK corporations?
The Bank of England have already indicated there is more to come, and treasurers are just preparing for that or hunkering down. And that's the problem, is we're getting hunkering down to cope with the new levels of interest rates. And consequently, we're starting to see build-up pressures for more slowing down of growth, and we're moving to a global recession. I don't think there's any doubt about that.
Yeah, I would agree with Jack on that. I mean, we see some of the central banks, the U.S., like you just mentioned, the article had raised it 75 basis points just recently. More to come there as well. I mean, trying to tamp down inflation that's running high, and concerns the supply and demand are not in balance. There's a lot of disruptions caused by a number of factors, from energy to materials, and this is taking a significant toll. Prices are rising on employment, food, energy. These are significant, so it's likely to get a little harder before it gets a little bit better.
Our next section is about over-the-counter foreign exchange market survey by the Bank for International Settlements. BIS recently released its 2022 central bank survey, which shows that trading in OTC foreign exchange markets reached US 7.5 trillion per day in April 2022, up by 14% from 2019. The survey seeks to increase the transparency of OTC markets, helping central banks and market participants monitor global financial markets and to inform discussions on reforms to OTC markets. Craig, what, according to you, from a Treasury perspective, are the key takeaways from the BIS survey?
Yeah, there's a lot in that survey. It's well worth a read. A couple of things that stood out, not necessarily for dramatic shifts, but for consistency. One is that the U.S. dollar remains the primary side of trades. It held pretty rock solid. 88% of the trades had the U.S. dollar on one side of it, essentially the same as 2019. And the euro, the Japanese yen, and the pound all held their positions and held roughly the same. The only minor change there was the renminbi, the Chinese currency. Rose to 7% from a smaller percent, so moved up to fifth most traded currency. I think all this is just interesting to see that it's been fairly consistent. Ongoing globalization continues, though more of those trades have been between, through inter-dealer activity rather than just on the customer end, but it's, globalization continues. Managing FX is still extremely important, and there's minor shifts on the number 5 through 8 of the currency. So companies are doing that. We've seen quite a bit more volatility on foreign currency pairs this year, after several years of relative calm. I don't want to say wait for the next 3-year show what comes up, but there's quite a lot happening that treasurers need to be concerned about. Managing your risks in line with your risk appetite, but the cost of doing so has gotten more expensive as well, especially on the FX side.
For me, the standout thing was that the foreign exchange turnover was primarily due to higher interdealer activity rather than spot trades by corporates. And that, again, emphasizes how technology is allowing more and more interdealing and those sort of transactions. But the basic underlying trade is not increasing much, if at all. And the other thing that comes out quite clearly is that the level of foreign exchange activity is still basically centered in 3 different areas: United States, Hong Kong, and the United Kingdom. And this hasn't changed in some ways it's quite depressing. The only thing that is good for corporate treasurers is that the technology is clearly getting more effective and more efficient. Whether this leads to greater trade or not is a completely different matter.
The fifth section for discussion is about decentralized finance, blockchain, and cryptocurrency transactions. The first story is about JP Morgan successfully executing its first ever cross-border transaction using DeFi on a public blockchain. The second story is about HSBC publicizing its significant investment in blockchain-based technology less than 2 months after its CEO reportedly stated that the bank had no plans to enter the cryptocurrency market. The new exclusive tokenization platform from HSBC is dubbed as HSBC Orion. Craig, do you think banks are growing more comfortable with blockchains? And will more traditional finance take place on public blockchains, provided there are solutions for key aspects like efficiency, scalability, and privacy?
I think we need at least an hour for that question alone in terms of the background. And I certainly don't feel capable of answering all of what you just asked there. But generally to answer your question, HSBC's point, you mentioned that less than 2 months after its CEO said we're not going to enter the cryptocurrency market. They're using blockchain-based technology, but not for cryptocurrency, but for their tokenized platform. And so this is we can issue digital bonds. So that's showing that the technology of blockchain, this distributed ledger, supporting the activity for efficiency and control, is gaining some traction among the banks. Maybe not, Ethereum and Bitcoin as much, especially in the banking world. But it is being used. It's being invested in. Some of it's taking place, but I think some of those nuances are important. Just like the JP Morgan story, the first decentralized finance cross-border transaction on DeFi, we've heard quite a bit about these non-fungible tokens or different types of token, the tokenization of digital assets like bonds, for example. It's a change in how that's handled. Banks are committed to that. There's a reason for that. So these mega large $1 trillion banks like HSBC, like JP Morgan, are using this type of technology to support the trade, the exchange of documents digitally, information digitally. I guess some of the words we use don't fit when we talk about tokens, right? There's the exchange of tokens, not necessarily documents, but the same concept. What are we exchanging, and how does it work? Banks are moving in this space, and moving carefully, but moving in a methodical and careful manner.
For me, the biggest thing out of these three stories is the fact that overall, people don't know what to do. We're still dabbling in the water. We're not getting significant shares. I mean, the quote from John O'Neill at HSBC saying that digital assets are a rapidly growing component within financial markets. Oh yeah, not a lot. The issue for corporate treasurers is when to get involved. The other issue is what's it going to be involved. The blockchain is very good for managing transfer of documents and tokens and things like that. For high-speed transactions like Visa and MasterCard operate and the other financial payment systems, it's nowhere close, and it's proving quite a problem of where to position this. If I was a corporate treasurer, I would be very wary of how much you can actually do in it. Yet there's more to come before it becomes anywhere near sensible. The other problem that's coming up is we're starting to see significant levels of fraud. And Santander's story of how they have put a limit on the monthly transactions of £3,000, which is not a lot, is just an example of the level of fraud that's starting to appear. Not sure how you manage that.
So, Craig, do you think imposing a monthly limit payment on cryptocurrency exchanges by Santander in UK is a means to safeguard their customers, or is there more to it?
This idea of limits on transfers, all of the different faster P2B payment schemes, there's all kinds of warnings against being forced to make payments, or are you sure you're making payment to the right person? So they limit what can be done when you set up a new payment. That gets relieved or relaxed a bit after you've made a payment. This is a way of protecting customers generally, but also a way of minimizing the negative impact with newer methods of transferring assets and value. I mean, we see that every way. I mean, from Faster Payments UK increasing their limits, every few years they've increased them. Same thing with real-time payments in the US, same day ACH, those limits continue to increase as there becomes more of a standard. So having something wide open and then coming back and putting some limits, we would expect to see those limits increase over time as the overall security improves. But, having lots of losses is bad for everything. That's why we saw PCI DSS come into the card, well over cards universe, 15 plus years ago. We've seen Swift customer security program coming in to protect the networks. We see these different standards with things like, Zelle and Venmo, et cetera. So that's a natural way of minimizing the level of exposure and risk that companies face.
Finally, gentlemen, I would like to wrap up this conversation by seeking your opinion on your choice for the biggest or most important story of the past week and why. If I may start with you, Jack.
For me, the biggest story coming out of this is that there is increasing evidence from a technological point of view and from an economic point of view is that the world economy is slowing. And the issue is how we manage this. It's unavoidable, and the issue for me is how they manage this. And so all of it just wraps into this one thing of how do you manage the coming recession? The other question is how long will it be and how deep? And that's also two important questions corporate treasurers need to think about right now.
Well, I am glad you asked Jack first. I would just make one comment on that. We're in the U.S., Jack, we had released, I think, 40 to 50 million barrels of oil out of our strategic reserves about a year ago. And then we did about 1 million barrels a day for a 6-month period, which ended a few weeks back. And then we did another 15 to 20 million right before our midterm elections. Well, that's not an endless supply. And so that's helped keep prices low, due to the fact that, demand has typically been higher than was higher than supply before that. But this extra infusion of 1 million barrels a day has helped that. Well, that's ending. So that's going to put some of that upward pressure on what's going on there. And we'll be past the elections in the U.S. this week. So I think I share your concerns about what's going to go on with how deep and how long will the recession be. The U.S. was in a recession the first half of the year, pulled up out of it slightly in third quarter. Maybe we dip into it, maybe we don't. But globally, I think everyone recognizes that there's likely to be a global recession. I'm glad you covered that point. I was having a hard time picking what I thought was most impactful in the past week. I'm going to go, of course, with something different. So there's some color there. The tripling of ransomware losses, ransomware payments in 2021. So reaching $1.2 billion. Well, that may not seem like a lot. A tripling of that, given how much we focused on ransomware in the past 4 or 5 years, maybe it shouldn't be startling, but it is startling that despite the attention that has tripled, the success has grown that much. So that ties into the sophistication of the attackers and the fact that they're so well funded. They get so much money from this. They continue to explore and exploit. And so I think the idea of our digital defenses needing to be upped significantly is, I'm going to go with that. That's the theme that I would like to focus on, because we focus on the economy a lot the last 6 months. So I'm going to put that as a bubble above the economy for me, just for this 1 week.
I have one more comment, which is it's COP27, which is the climate change conference, which comes every year at the moment. And we shouldn't ignore this. It's critically important for all of these different countries and different organizations. and they can't ignore it anymore. We need to somehow act, and act fast.
Those are very valuable insights. Recession, ransomware, and climate change crisis. I hope corporate treasurers and everybody in the finance and treasury arena who's listening to this podcast will pay attention to what Jack and Craig mentioned during this very insightful conversation. Thank you, Jack and Craig, for your informative analysis. We would also like to thank our CTMfile audience for joining us on this edition of Open Treasury. Please subscribe and look in the show notes for the article links. Thank you. This podcast is provided for information purposes only, and statements made by CTMfile or guests on this podcast are not intended as legal, business, or consulting advice. For more information, visit ctmfile.com.